Hey guys, welcome back to Father and Son Investing. The video that you clicked on is going to start here in just a minute, but I wanted to take just a moment. We had a little bit of tragedy happen around our house yesterday afternoon when I finished recording the two videos that are companions to each other, one of which you've clicked on. I had texted my wife and son to say, 2 videos recorded but not edited. I'm going to go play with the cats. You see, we'd gotten 2 kittens earlier in the week, a little black one and a little calico cat. Well, I noticed when I went to get the cats to take them out front to play in the yard that the calico one seemed a little bit off. And then later when she tried to climb the steps out in our front yard, her little hind legs just seemed to have a hard time getting up the step, much different than her brother. Shortly after that, she laid down and then really quickly deteriorated. And by the time I got her to the emergency vet, it was really too late. She looked like she was having a stroke, and within just a few minutes after getting there was dead. So I tell you this because I realized how tenuous life is, and I just want to remind you, even though you're interested in finances and that's why you're watching this channel, pay attention to the people around you. Give them a hug. Pay attention to your animals around you. Give them a hug, give them some loving, because you just never know when that little thread of life is going to end. Now I'll let you get on to the video. Thanks. Hi guys, welcome back to Father and Son Investing. This is the second video that I'm making today. The video that I made earlier talked about 3 reasons why you might want to consider purchasing U.S. Treasuries, talking about bills, notes, and bonds. This video, however, is talking about the personal reasons that I have why I am not currently purchasing Treasury bills, notes, and bonds. There are a number of reasons that I think you might want to consider that are important enough to me right now to keep me from purchasing U.S. Treasuries. So let's go ahead and get started. My first reason for not currently purchasing U.S. Treasuries is that I don't think that the yields are good enough to entice me. Now let's just take a peek at what the yields are right now. The 1-month Treasury bill. Right now you can get one for 4.345%. That sounds pretty good, doesn't it? However, I can get a similar yield from my money market fund at Schwab. Right now it's paying 5.29%. I do realize that's a little bit less than the 1 month, but you know what? There's no hassle at all for me to just hold that money market fund. So the hassle factor is enough to keep me from purchasing the 1-month Treasury. And then when it comes to every other Treasury, well, again, the yields just aren't good enough to me right now. Let's take a peek at the 2-year Treasury note. Right now, you can get one that has a yield of 4.521%. That sounds pretty good. You know, yields had been so low for so long that I think our views of what current yields are a bit warped, 4.521%. However, last fall, I managed to luck out and get a 5-year Treasury note for right around 5% yield, and that really is my threshold. Nothing less than 5% is what I think is worth loaning my money to the government for 2 years. Let's take a peek at the 10-year Treasury note. Right now, you can get one for just a little bit shy of 4.25% yield. And again, looking at how yields have been in the past, this sounds pretty good. We got so used to yields of like 1% or less that, again, we're a bit warped here. But 4.24% to loan the government money for 10 years to me just does not sound like enough to entice me. It might be different for you. So right now, the yields are the big thing that are keeping me from purchasing U.S. Treasuries. My second reason has to do with the sheer volume of U.S. debt right now. This is from the usdebtclock.org, and right now we are just shy of $35 trillion that the U.S. government owes. $35 trillion. And that number has just spiked in recent years. Really, right around the time of COVID, we certainly saw this massive spike up here, and that might be reasonable to expect. However, let's just take a peek at what has happened really since about 2000. So just looking back here, talking about the total size of the marketable debt, it was about 25% of US GDP, and it really kind of hovered in that 25 to 27% or 30% range. And then when that Great Recession came, we certainly saw a big spike, but that continued on for a number of years and really has just gone crazy. So Looking back to as recently as about 2007, our debt to GDP ratio really was hovering in that 25 to 30% range. And now it's just really, in my opinion, out of control. At one point, getting to 100% there. We're talking about the marketable debt. Of course, the U.S. certainly has some of its debt that isn't marketable. It owes itself. And so coming back to this debtclock.org, the size of the debt and the fact that really I just expect it to continue to go up, and so does the Congressional Budget Office. Right now, the federal budget deficit officially at $1.86 trillion. Initially, the Congressional Budget Office was predicting for this year $1.5 trillion. Recently, they raised that to $1.9 trillion. I'm not sure how we're not even going to hold to that amount when we're almost at $1.9 trillion with still a couple of months to go in the fiscal year. So just the sheer size of the U.S. debt, to me, says they need to be paying me more in order to entice me to purchase the U.S. debt. The third reason that I am not currently buying U.S. Treasuries has to do with the U.S. Treasury issuance plan right now. You may or may not be aware that currently the Treasury is purposely holding down the yield on the 10-year Treasury note. And the way that they're doing that is by offering up fewer 10-year Treasury notes for auction and instead skewing things towards the shorter dated Treasury notes as well as towards Treasury bills. In fact, if I scroll down here from this announcement back on the last quarterly Treasury funding announcement, you'll see here that they said they were holding things down for June on Treasury bills, and that had to do with tax receipts coming in. But then they were going to, in July, go right back to the highs from February and March. So they're purposely selling these Treasury bills at a higher yield than what they could be selling 10-year Treasury notes for because they're keeping that 10-year Treasury note yield down. They're manipulating that. And also using, again, these shorter dated Treasury notes here to keep the yield down on that 10-year Treasury note. Remember, there are so many things that are based off the yield of the 10-year Treasury note, and the Treasury is currently kind of manipulating that. So I think at some point the Treasury is not going to be able to keep this up, but I think that won't be happening until after my reason number 4. What is reason number 4? The fourth reason why I am not currently purchasing U.S. Treasuries has to do with our upcoming election. Of course, that will be taking place in early November, so really just a few months away. And until then, I don't think that this U.S. Treasury situation and the yields is going to shake too much. I think they are purposely trying to keep this rock solid steady so that they can avoid complaints of people saying that they are manipulating an election here. So I think personally, after the election, there are going to be a number of factors that may drive the Treasury yields higher. So I personally think that there may be some factors after the election that will drive U.S. Treasury yields higher. One of those will be that the suspension of the debt limit will come up again in January. So starting in January, that debt limit is going to come back into play. The Treasury, of course, is going to be spending down all of the money that they've hoarded while the politicians kind of try to sort this out. And then when that has been sorted out, and of course they'll just kick the can down the road again and raise the debt limit. When that's all sorted out, the Treasury is going to be trying to refund themselves again, and they're going to be issuing a lot more debt. And thus, I think we might see a little spike in the yields, and that might be a great time to buy. So I'm holding off until after the election, really probably till after January 1st when the debt limit comes back into play. My fifth reason is one that really applies to someone in my age group or younger, and that is that I am not in a fixed income type of investment strategy right now. Certainly, if you are retired, you may be looking to get these yields guaranteed, and that goes back to my other video where I talked about reasons why you might want to consider investing in U.S. Treasuries right now. But for me, my current situation, I don't have to have these type of yields. I have time to sit and wait to see if yields come back up, which quite honestly, in my opinion, they should be. Again, we got so used to these yields being just bottomed out here near 0% for so long that 4.24% on a 10-year Treasury note sounds reasonable, but in my opinion, it should be higher than that. Why on the 10-year particularly? Because in a normally functioning bond market, there should be a term premium, the extra amount that the government pays you for tying up your money for longer. You can see what it has been in the past. It's only been in recent years that this dipped negative, and we've just gotten kind of used to this, the government not paying us extra to hold our money for a longer period of time. Look at what the term premium looked like back here, just nearing kind of the end of that Great Recession sort of time period, 2009 or so, 3.5%. To me, that's reasonable, that the government should be kicking in an extra 3%, at least an extra 2%, to hold your money for up to 10 years. So that's one more reason why I'm not purchasing. So 5 reasons that I've given you why I currently am not purchasing U.S. Treasuries. So those are 5 reasons that I've given you why I'm currently not purchasing U.S. Treasuries. However, as I thought about this topic, I did realize that in one way I am purchasing U.S. Treasuries, and that has to do with my 401k account. And I am increasing some of my bond purchases in there as I am nearing retirement. And some of the funds that I am holding are investing in U.S. Treasuries. So I'm not totally abstaining from U.S. Treasuries, just not currently using my cash to purchase U.S. Treasuries. Let me know if you have other reasons why you are currently not electing to purchase U.S. Treasuries, or if you don't agree with any of these 5 reasons, let us know in the comments as well. I'll also highlight the fact that we are really close to 15,000 subscribers, and if any of our videos have been of use to you, please hit that subscribe button and put us over the top. Until next time, enjoy your investing. The first one that I made just a few minutes ago was talking about 3 reasons why you